Hey traders, Raghee here, and in this video we're going to take a look at the Dow, the YM, we're going to take a look at copper, and we're going to take a look at the IYT. Now as a general rule, I like to focus on those indices, then sectors, then stocks that are relative outperformers. Well, nothing is more of a relative outperformer than an uptrend, than an overall what I call double green uptrend. So let's cover what double green actually means first. So in the upper left-hand corner of, well, nearly all my charts, you're going to see two labels up here. And you can see one label says, it's a little tough to see on top of the price. There we go. 813.21. Those are exponential, EMA, exponential moving averages. And the other one is labeled simply the wave, which actually is the 34 exponential moving average. So when I have two yellow labels, that means the order in which the 8, 13, and 21 are structured is more crisscrossing. It's not a great drawing, but you get the idea. Ideally in a trend, we have 8 over 13 over 21 over 34. And that's what this is measuring. So I separate the 8, 13, 21 from the 34. I don't want to look at the longer term exponential moving averages at the same time that I'm looking at the shorter, more what I would call twitchy ones. So I separate them into two labels, which we call trade flags. When they're yellow, that tells me we have a non-trending market. Doesn't mean that the market's going to sell off. It doesn't mean that the market's going to rally. It just means it's not in a trend any longer. But this idea, which is the way in which I decoded Charles Dow's work, Charles Dow would say, in not so many words, respect the trend that was. In other words, if you're going to have a bias in a non-trending market, let it be in the direction that preceded the break of the trend, and that's up. So I'm still mildly bullish on the Dow, and the Dow is, relative to the NAS and relative to the S&P, it is better, more bullishly structured. Case in point, we have our first red grab candle on the Dow when we actually have two on the S&P and far more on the NAS. So it's relatively speaking been stronger. Now, a couple reasons for that. One would be the XLI, which you can see is double green, heavily weighted sector, sort of the heart of the Dow. IYT transports, lo and behold, also double green. But unfortunately, the techification of the markets, the big six, Apple, Microsoft, Amazon, Facebook, Google, and Goog. You can throw Tesla in there on the NASDAQ, but it's not in the S&P. But the big six really have sort of taken over everything. And so the tech weighting within the Dow is the heaviest it's ever been. And so you have tech influencing the Dow in ways it never has before. But let's remember healthcare is also heavily weighted. And then you have transports and industrial. So relatively speaking, when you crack open the Dow and look at the heavily weighted sectors versus the NASDAQ and the S&P, you've got better relative performance in the Dow, stronger. Now, one reason I also do not want to bet against the Dow, and why it's one of my favorites, is copper. Copper also is in a double green uptrend. So one of my favorite ways right now to focus on long positions in the equity markets is to focus on those double green sectors, those sectors, especially in the relative outperformer of the Dow, that are going to track, in many ways track with, but behave even better than the Dow. Because remember, the Dow is sort of weighted down by XLK, if you want to look at it that way, the tech, and XLV, healthcare. So not that XLV is in a downtrend, but look how much weaker it is. Here's XLK, which is Microsoft and Apple mostly. Again, compare that to IYT, XLI, and then copper. So one of the best ways that I, right now, have been capitalizing on my overall bullishness in the market is buying pullbacks in copper, buying pullbacks in the IYT, and buying pullbacks in XLI. Check that out. See if that relative performance is something that'll help you tighten up where you're buying, why you're buying, and focus on those parts of the market that are behaving in the most structured way. Structure, again, defined by those moving averages that we talked about. Hope that helps, and I'll see you in the next update.